Hello, everyone. Welcome to another nighttime show. A day later than I normally do it. I was tired last night. Didn't get around to recording, even though we did come in here and talk for a little bit. If you're watching on YouTube, if you would like to join the Discord, ask questions, kind of be a part of our trading during the day, I'll post the link in the description below. Know that everything here is for entertainment purposes only and should be viewed that way. I'm not telling you what to do. I would never offer you any type of financial or any other type of advice. This is just me in podcast form talking to myself, talking to other people that I trade with about things that I've observed. And again, it's for entertainment and possible education purposes. With that out of the way, you said choppy mic? Is it choppy mic, guys? Okay, it might be on your end, so maybe restart, log in, log out. Could be your internet connection if you're on your phone. So the topic of this video, this discussion, is personalities. And through answering questions, through going through emails, direct messages, other things, talking to people in here, there seems to be two extremes. And I'm going to first highlight the almost unrealistic, but with some accuracies in it, the exaggerated extremes. And then, to be honest, those represent some of our traits, but not all of them. So the two are first, the one I fall under, which will be the main topic of tonight. So you'll know a little bit more about me and my style, and tomorrow we'll talk about the other one. But the one extreme is the shoot from the hip almost person, the default aggressive person when it comes to trading. I can wake up, you can trade, you're not afraid of losing. It doesn't really even bother you to be down a little bit of money. You're just making trades. You're not someone, and I am taking out the people here who don't know what they're doing and they're just jumping in and throwing cash at something. That's not who I'm talking about. I'm talking about the people who know a strategy. So we use certain strategies in this room. Eventually, we're going to start posting some videos with those strategies for people to watch here. But we have certain strategies and certain methods that we use to make money. We teach them, we tell people what they are, this is what you do, or this is what this is, this is what this is, this is how this works. And they're extremely successful, in my opinion. I say that as a full-time day trader who only does this. This is my only source of income, is doing this. So I do this because I trust the strategies. But for someone with my personality, a generally default aggressive, kind of don't really care that much. I can handle losses pretty well. I can handle if things are going up or down, and I can take that kind of psychological damage. I can mark it into something, and I'm not even thinking about anything. There's not a lot of stuff coming through my head as far as like, I'm up this money, I'm down this money. It's almost like a feeling. Like there are rules you're following, and there are rules I'm following to enter, and in a sense to exit. But it's just, here it is right here. Here it is right here. This is a trade. This is a Mark 1. This is Mark 1. This is this one. Okay, I'm going to take this one. And it's almost that quick. It's that quick OODA loop that I talked about in, I think, episode 1, the first show. It's that view it, take it. View it, take it. This person is going to be the type of people, and we have people in this room that are like this, they are going to grow their accounts the quickest. It's like you give them a strategy and they're like, okay, here's the strategy, here are the rules. Okay. And they instantly go out, they view the strategies, and they're like, they almost like overnight adapt them to themselves and just take money, yep, view it, take it, view it, take it, view it, take it. And that's literally as simple as it is for them. View it, take it. That's it. That's it. That's it. This might be it. I'm going to try it. This might be it. I'm going to try it. Oh, I lost. Whatever. Go to the next one. That is one side of the table. Within that side of the table, you do have people who cannot handle the losses as well, who get too bent. And so there's other extremes in there, which we're going to come back to later. But just for one side of the table, Con said it, so we'll go with this one. View it, take it. That is one side of our window, or of our linear line, I guess we'll say. That's one side. There's another side, The other side of that table is the overly cautious person who you can give them a strategy, and we'll use the strategy. Let's look here. Let's say the Mark 1. So let me go to a 1-minute candle here on letter U. Okay, so here we go. So this would be something that a person who liked this name, and I'm using this because it's pretty much the only name I traded today, and this is one of our strategies. So no Mark 1 actually. Let's see. Yep, this is kind of one here. We'll go to here. We'll say the 8. So the know your limit 8. This is an 8 EMA moving average, for those who don't know. This is an 8 EMA moving average. The strategy is the stock is trading above the first 1 or 2 minute high. It is. It's going through day highs. It pulls back, and for the first time it tests, it hits an 8. It pulls down. It pulls down. You buy the next candle that breaks out. And the trick is to buy it before it actually breaks the top of this line here. So if you see this, you can see my cursor. You want to buy it before it breaks the top of this candle. That is a know your limit 8, plain and simple. Someone who is on the default aggressive side could be like, my side of it would be like, okay, that's the first 8 that's taken. This name's been going up and trading well. I'm taking this. Pretty much just like, I see it. Yep, this is it. I'm taking it. And I buy somewhere in this candle. Like somewhere around here I buy. And then I catch this move, and then who knows what happens in here. That is one. The other person who is not default aggressive and who's on the other side of the spectrum, the overly cautious person, the analytical person, the person, and we all know, and some people in here are this way, this is not a worse way to be. This does not mean you're not a better trader. This does not mean you are worse than somebody else. This means you have your strengths and your weaknesses. The other side has their strengths and weaknesses. We'll get to both of them. This side of the table, yeah, you could play the downside there depending on how the options move. This side of the table, the left side of the table, want everything to be like almost perfect. They need as many rules as they think they need, or as many possible rules as there are. So, you know, they might not like this one for some reason because, okay, this is a Cat6, we're going down on it. You know, that sometimes is a negative, and it often is. So this would be maybe a lower conviction one, and they might have been like, I'm not going to take that one. So they didn't take it because it wasn't set up perfectly. They might have a bunch of different rules that they have in their head. Maybe they had, maybe they didn't like something else about it. Maybe they had an RSI indicator or whatever it is. Maybe they had 10 or 15 different indicators that they like to use. Like, oh, it wasn't set up. This wasn't here. And what about this trend line and this and this and this? And they go through all these different little things in their head. And sometimes they can suffer from information paralyzation. They can want so many things that they're looking for in a trade to be set up perfectly. And unless they have that trade that is going to give them in their mind, as close to 100% chance as you can get to get a win, then they're not going to take the trade. Now, that type of person takes a lot less trades. They may only do 4 or 5 trades a day because it is very rare that you're going to get everything that you do set up. They'll say, like you're saying in chat, that you'll look for a way not to take a trade, almost like, oh, it's going up, but I can't handle the loss here. And there's so many things that go into their decision making that it's not easy to take a trade. And it could be, and I'm going to assume, and for the sake of this, we're going to say it's not account size. So we're going to get away from the account size. Analyst paralysis, that's a good way to say it. So we're going to get away from the account size portion of this, because the account size can be something, but if you have that mental style, if that is your trading style, your not even trading, your personality style, if that is your detail-oriented personality style, and you take that into trading, that's just who you are, and you're just applying that to trading, generally speaking, for whatever reason. And if you had a bigger account, it probably wouldn't go away, because that's how you make your decisions in life. That's usually how you make your decisions. That's usually how you choose to do something or not to do something. And for that person, their downside is they miss these trades. For me, this morning, uh, I bought in here somewhere, and I sold somewhere over here. Pull down, so I bought in here. I bought here. I actually bought here every pull down. I pretty much bought every one of these 1 minute breakouts. There's not a rule that says to do that. I was getting great price improvement. So I was getting filled on or near the bid every time and very near the ask on a dollar spread. So every time I did this, I made around 80 cents to a dollar on my contracts. And I was like, oh, this is working. And I didn't once think about rules, didn't think about anything else. Another person would be the opposite. It would be hard for them to do that. They'd be like, oh, there's not a strategy, there's not this, there's not this. So we can see these are the two types of traders, and I hope I've done a decent job of, and I will get into the second personality type more tomorrow. But the information, the analyst mindset, as opposed to the person who is that view it and take it trader. So the view it and take it trader. Do y'all get what I'm saying there with the two different? Do y'all agree with that? I know that there is a group within those groups that you could take, and you could definitely say, oh, well, I'm a little bit of this. Yes, we're none of us are to the extreme. Good. So none of us are generally speaking to the extreme. And the best traders are in the middle, in my opinion. And I think that's generally why women are the best traders, is because as far as on a bell curve, if you looked at a bell curve of successful, traders and stuff and divided it into sex, men would probably be on the extreme ends, because men generally, not all the time, have as a sex more of that ability. And then women, generally speaking, are less or more risk adverse. So they're more successful over time. Just my opinion, it's an opinion. Don't shoot me for it. And yeah, you can definitely move back and forth, and no one is stuck in one side forever, and you can kind of change. And honestly, the best traders can change, I think, and can learn to do other things, or can learn when it's actually helpful to take something or not to take something. The rigid trader would have got taken out, but the PI was so good in letter U. But yeah, you could have been taken out here. And there's nothing wrong with taking a sell and taking losses. But for a trader, so now for the trader on the side that I'm on, the view it and take it trader, a default aggressive trader. If you're a default aggressive trader, your strength, generally speaking, is that when you find a strategy that you can take and you find something that's working, you really can bend into it and make a lot of money. You can grow a super small account and you can take that higher quicker if the market's good and if things are working. Because if I just tell you, hey, every time this happens, and you trust me and you trust the people around you, like, okay, yeah, I'm just going to do that. And then you can just go and do that, adapt it to yourself. You'll find ways to make it work. You'll be like, oh, well, hey, if I do this a little bit differently than what he said, this works really well for me. And if I front run at this level, this seems to work really well for me. And you'll just take it and find ways to make money with it. You will fail more often than not, and most of the emails I get and most of the messages I get from people that are on this side of the spectrum are, I keep going up, I have all these great days, and then bam, massive blowout day, bam, massive blowout day, bam, massive blowout day, because they don't know how to rein in their default aggressiveness. They don't know how, when they're just in it, sometimes they get tunnel vision and they get sucked into a name or to something that has been working in the past, and they're sometimes unable to detach and be like, well, I wonder why this trade isn't working. Maybe I need to look for something else. And sometimes they even know it in the moment. Sometimes they even know that this isn't a good trade, but because their mind works that way, they just don't want to stop, and they just want to keep going. And they just, like, I'm just going to hit it again. Next time it's going to work. I'm just going to hit it again. Next time it's going to work. And believe it or not, people with this mindset seem to, and this is just observational. This is just observational from what I've seen and read. These people have the ability to take those losses and add up, and they don't feel it until they've dug themselves in a hole that you're like, holy crap. And that's very often that side's downfall, is tilting, is tilting because of their comfort and sometimes taking losses. Inappropriate sizing. If you're completely comfortable with trading 50 contracts of stuff, there's a time to take 50, 30, 20, whatever contracts, and there's a time not to. Sometimes people, when they have that default aggressive mentality when it comes to the market or to strategies, when the strategy isn't working, their default is not, hey, I'm going to correct this, and then the way I'm going to correct this is by sizing down. Let's focus on let's focus on the stochastics and wait for it to set up again and wait for a pop. Maybe let's look on the 2-minute and see what's going on and see if we can find something over there. And they don't instantly go to that. Instead, what they instantly do is almost double down on themselves. They almost double down on that idea that, that this is going to work, that I'm going to push this through, that I'm going to smack this harder. Okay, it didn't work that time. I'm going to take 20 contracts. The next breakout is going to work. That 1 minute didn't break out. The next 1 minute's going to break out. Oh, man, that didn't work. Okay, maybe I'll do 30 contracts this time. It hit the 8. It's definitely going to work now off the 8. And they don't even think about it sometimes. And in the back of our heads, and this is me, and I'm talking through this because this is literally my story of stuff that happens to me sometimes. Less now. I've begun to adjust and to change because I know it's necessary, but you start doing that. And so that's their downside. That's the weakness of that, is that it's much easier to get hurt and to not be able to stop yourself from going down that hole and stepping back and detaching, viewing the situation, seeing where you need to rotate to, emotionally detaching from the situation, and finding exactly something that you're looking for that works, or looking and being like, hey, nothing looks good right now. That's one of the strongest things you can do. Is like, nothing looks good right now. Let's wait 30 minutes. You sit there for 30, 40 minutes. Oh, hey, this looks good. Okay, this is working. Now I take it. When traders get sucked in who have that default aggressive mentality, it's almost, and not always, and you have to train this out of yourself. So I'm speaking to those in you who have that default aggressive mindset. So I'm talking to myself because that's me. I'll slam in sometimes, and sometimes I'll go into 100 contracts of something. That's not, it doesn't even faze me sometimes, depending on the name. I'm not doing that in Amazon. I'm not doing that in Tesla, but there are names I do that in, and it doesn't bother me. But then there are times when I have to realize now's not a time to do that. Let's try 10. Let's try 5. Let's see if I can just find some winning trades and some winning stocks that are working, and then begin to increase. For me, I'm just talking to myself, if this is working. But if I just start jumping into stuff, which is a default aggressive person, you're talking about looking, waking up in the morning, hey, this one and done's going to work 100 contracts. You're crazy. Like, you're literally risking like 10 points on that, or 5 points on that on some names. Like, you're crazy. It's full gambling. It's not smart. But that's the risk, because you're like, hey, risk reward, this is going to work, this might work, this worked yesterday. And they remembered the day before when something worked and they would have taken it. And again, remember, we're talking about the mindset of somebody. So if you can't understand why someone would do what I'm saying, then you're probably not, you don't have that necessary mindset. If you're like, yo, you got to be more analytical, you got to wait for this stuff, that I couldn't imagine doing something like that. And don't use the 100 contract size. You do it with 10 contracts, 1 contract, whatever your heavy is. And looking at something like that and saying that, I couldn't do that, then you're probably not on that side of the spectrum. You're probably to the middle or the other side of the spectrum. But those of us who have to learn to rotate. They have to learn to chill. They have to learn to detach. They have to learn that to trust the people around them and to wait for the actual strategy to set up and not just smash everything. I use jiu-jitsu as a metaphor, and you could use that. You could use football. You could use a lot of different things. You could use the military. If we were looking at Civil War battles, or let's go back to the Revolutionary War or the French and Indian War. when the redcoats, the British, would fight, and they thought it was dishonorable to fight hidden behind trees and behind different stuff like that. It was like you stayed in military rank and file, and no matter what you did, you didn't break it. You didn't go hide and shoot from behind trees. So they would literally be they'd literally be just be walking through the woods, and everyone's hiding behind trees shooting at them. And not all the time, but this did happen. And they would literally, like, their men would go hide, and the officers would go drag them back out and get them back in formation, and then they would just get shot and they would die. You can't keep doing something that's not working. You can't keep jumping into something, trying to smack it, trying to throw more lives at it, trying to look at something and be like, this isn't working. So instead of adapting, instead of maybe changing what I'm doing a little bit, what I'm going to do is I'm going to hit it harder because I'm more aggressive, because I'm better. Boof is saying that was him in the video. You just getting bent. You're just like, and I see this. Hey, this is gonna work. No, it literally just cost you like $5,000. You were just wrong like 5 times, and this thing's not popping. Nope, I'm gonna hit it again, and I'm gonna go double size. It's gonna work, and I'm making my money back. That's that default aggressive person. That person has to learn, and default aggressive is great. I'm default aggressive. But that's the downside. So once we understand our personalities, we understand, hey, when names are working, like Tesla and Amazon the other day, like for me, you was today, but I think there was other names that were working. And throughout the week, we've had other names. As these names are working, we know that we're so confident in going in them that we can take size. Our trick and your trick that you have to get into your head and you have to drill it there is to be patient. It's a dance. It's maneuvering. Don't charge straight at the enemy. Don't be Lee in Gettysburg where you send everything you got right up the middle towards the enemy's guns. Wait. Ambush them. Save your strength, your mental capital, your physical, your financial capital in this case. Wait for the opportunity in the opening to use your aggression, as it were, to use your view it and take it trades for actual value. If you are going to take dumb names, size down so much that it doesn't matter if you lose, which you should be doing anyway. But once you get going in something, be patient. Wait, an ad's not working. Let's rotate. Hey, nothing's working for the first hour of the day. I'm just going to chill. I might be down a little bit, might be up a little bit. I'm pretty sure somebody in here is going to find something. I'm going to find something. We're going to get some news flow. This is, if you're a default aggressive person, what you should be thinking. Let's just wait. Boof's going to find something. Geronimo, Rose is going to tell me that Amazon just started working. These different things are happening. Somebody in chat types something. There's some news that comes out. I'm going to go take that. And you wait to use your strength. You become, and you try to move to the analytical side a little bit. You have to adapt. You can't be all of what you are, because in every strength, in every part of our personality, there is a downside to it. It makes us very successful at some things. It makes us not successful at others. You could have a personality trait that makes you an amazing worker, or it's Veterans Day, so you could be an amazing drill instructor because you have this incredible personality that suits being a drill instructor. That personality might not make you a great husband or wife. Great at one thing, not great at the other. You have to learn to shift, to turn that off, and to save that for when it's needed. So when the opportunity and the time comes to use that during the trading day, you can capitalize, and you're not going to be digging yourself or filling the hole that you just dug back up. Instead, you're going to be building your account then. You're going to be making your money then. Instead of getting toxic and going whatever, if you're just chilling and having fun waiting for something to come, when the time comes, you're going to make your money. When that opportunity comes, you're going to make that money. There are different ways to get to that point. But are y'all kind of digging what I'm saying so far? Are you kind of like on following the kind of trail of thought? And there's for sure some things I'm not saying, and there's some things that are there's some things that I'm not getting to exactly. But if you are that type of person, you have to identify these things in yourself. And a lot of us are, because if you don't know this, we are scalpers. We, generally speaking, we do use setups. But and someone asked me earlier about like sell times. You know what my sell time is? Sometimes it's 5 seconds after I buy something. It's when I'm green. I do hold things longer, but I hold things longer when I'm up so much and I've already sold 50 to 80%. Here's the difference in an analytical person and me. I don't actually like Kelly in the other room, if y'all know him. Kelly literally has an exact number that he sells at almost, or right there at it. Um, I don't. I'm just like, looks good. And then I'm like, it doesn't look so good right now. I'm selling. Or the stochastics. I wait for the stochastics to cross down and I sell then. That's an exit point for me. But I don't. I'm just like, hey, it's going up. Why would I sell? I already sold 80%. I'm just holding a runner. I'm just going to sit here and sell. I'm not, but there's no number in my head. There's no analytics that are going through my head. There's no number that's going through my head. Like, oh, this level's here. This level's here. I'm just kind of watching, and then all of a sudden I might see a resistance or a trend line or R2 or pivot or whatever it is. I'm like, oh, time to get out. I think it could drop here. And then I get out, and then I'm ready to get right back in almost instantly if it busts through that. And it's not necessarily a strategy as far as like all that. It's just there's no analytics to it. It's a feeling, and it's just going with the flow. That's me. That's how I choose to do those type of things. Somebody who's analytical, it would be harder for them to do that. It'll be much more difficult for them to do that. They would almost need to have those different things. Different size, it depends. Usually smaller. If I'm chasing, I go like smaller size, especially if I made a bunch of money. I'll go like 1/10 or 25% size type thing. Or I might buy back my 20%. Like if I sold 80, I'd buy back my 20% if it goes through, something like that. Or 10% of, 10% instead of 20%. There's no, but see, again, you're like, is there a specific size or whatever? No, not really. Just whatever I feel like doing. It's literally just like, yeah, that feels good, whatever. Like, but it's hopefully never sizing up into those breakouts. That's when you get wrecked, and that's what somebody that's on my side of this dichotomy, of this spectrum of traders, has to realize. Yo, let's chill. Okay, here we go. Let's chill. Okay, oh, this is working. All right, here we go. I'm going to start trading this. And then doing what we've done the last couple of days, which is realizing when it's time to stop. And I've called that out when the names are trendy. I'm like, okay, hey, hang on, guys. And I did it 2 videos ago when I showed y'all how to decide when something's not working. You instantly have to go from that default aggressive, trading the momentum, the MOMO of a stock, to then going back instantly to those C strategy setups, simple, easy, and effective strategies that are honestly, if you ask anybody who does them regularly, probably 70% effective. If you're a statistics person and an analytical person, which we will talk about tomorrow and maybe a little bit today, but mostly tomorrow for time's sake, and so I can give you the proper attention that you need. If you're that type of person, then you can be extremely profitable and all that, taking these quick scalps and using the actual strategies that are legitimate strategies, not just trading the momentum. But when we're doing things, we're trading the momentum. So if you're on this side, the view it and take it, you have to learn when the momentum has stopped, and then you have to be happy. I'm not even going to say ready. You have to be happy with what you made there. You cannot wish for more. You have to be like, yo, I did good there. Hey, made it. All right, it's breaking down now. Okay, wait for the next C strategy. I'm going to try it. It didn't work. It didn't go through. Maybe I'll try it one more. I'm going to size down just in case it works. And it didn't work. And you have to switch, and you have to be able to adapt on the fly from someone who's default aggressive to someone who's strategical. Default aggressive is great. Those are the people that win wars. It's Veterans Day. Military, those are the people that win the wars. The generals that win the wars, Sherman. Read the end. Go listen and see what Sherman did as opposed to the rest of the Union generals in the Civil War. The Union generals in the Civil War, for the most of the Civil War, were political and they were cautious. They were very cautious. Yeah, that's why we call ourselves the rotation crew. And we rotate. We don't stick with any stock or anything. So they're cautious. And they got destroyed by the South. They outnumbered the South. They did everything. They could not win. The South was, in a sense, especially on the battlefield, Stonewall Jackson versus a lot of the other Northern guys, default aggressive. And he kicked them up and down. What happened at the end of the war? Sherman did basically Grant. I'm sorry, Grant and Sherman. I'm thinking Sherman, his march to the sea through Atlanta. Him too, but Grant is the guy I'm thinking about. So put Grant's name in where I was talking about. They called him the Butcher. He was just went after Lee and basically just beat him down. And they had the men and they had the stuff to do it. And he knew when to do it and he knew how to do it. So the default aggressive military leaders, the ones who are not afraid to, they're confident in themselves and they're not afraid to take risks and they're not afraid to go for it when it's there. They're not afraid of that. They're just doing the strategy, as it were. It's like, that's the strategy, that's the setup. I'm taking it, I'm doing it, I'm going for it. And they're just going for it. They're just getting it done. Those are the guys that win wars. At the beginning of wars, or the people that are in there that are cautious, that are overly analytical, that have all these extra pressures on their mind of, this, and I don't want to look like a fool. I don't want to lose. I'm scared to lose. And this is what we're going to get into with the analytical person, that they're scared to lose. I'm not sure if I want to take that. I can't handle that loss. I don't want to lose this capital if this does work, if this doesn't work. And that's what's generally going through that person's mind more than the other person. But there is a time and a place where default aggressive just doesn't work. We're going out in full strength. Lee at Gettysburg, the entirety of World War I. You see these things happen, and you see sometimes it doesn't work. So you have to know when one works and when one will not work throughout your day. You do that by rotating. You do that by testing out things, by trusting the people around you in the room, by trusting your own results. If you're losing in a name, be like, well, I'm going to miss it. I'm going to let it break out, and then I'll come back to it. And this name isn't working. I can't make money, and I'm going to leave it alone and go try something else. There's ways to change and ways to improve yourself. One is to know that strength and that weakness. Once you know it, hey, I'm in this camp. He's talking about me. I'm that person who doesn't mind taking losses, who can be down. You make up your own number, whatever's a big number to you. And it doesn't really bother me, and I continue trading. And sometimes I have big blow-up days, but a lot of times I come back from my big down days. It's great that you can come back from your big down days. It'll be better if you traded intelligently early and you didn't get down. And if you look back and you traded intelligently and you still won, good for you. And you still lost, I'm sorry, then that's okay. Then there's nothing wrong. You just maybe took too much size. And you generally know that day, and you're okay. And you continue trading, and if the market gives you an opportunity, you get it back. If it doesn't, then you don't, and hopefully you come back the next day without a lot of psychological toxicity. That is generally how I handle a lot of my days, and that's generally how my mindset is when it comes to trading, and I know that's how other people's mindsets are when it comes to day trading and scalping and finding the right setups and playing those right setups heavy and just continuing to do something until it stops working. The trick is finding out, hey, it's not working right now. I got to stop before I give back my capital. For these people, because we're mainly focusing on these people tonight, and tomorrow will be, again, the more analytical type. The danger early in the day, because we'll talk about the first 30 minutes, and maybe Booth, I know some other people can attest to this, I can attest to it. If you get down early, it's very hard to be really happy with your day sometimes, even if you get back green, if you go toxic. Because there's always that, man, what if I just hadn't have gone down this? I'd be up, let's just say, 10,000 instead of just break even right now. And I did all this to get back there. And it's so easy to get toxic. It's so easy then to not enjoy the rest of your day. It's so easy to not be happy if you go out there and you're just running right up into the defenses of the market, as it were, charging right into the cannons, and getting blown away. It'll really, even if you end up green, sometimes if you come back is a great feeling, but a lot of times it puts so much stress on your day that you're overtired, you're not relaxed, you're not enjoying being a trader, you're not having fun, you're not rotating with fun, you're not enjoying the chat room, you're not enjoying the guys that are in here talking, the gals that are in here talking, doing their thing. You're so stressed out and so uptight that the job's not fun anymore, that you don't want to be here anymore, that you don't want to be doing this. Something you need to identify. If that's you, try to find something outside of trading that you really enjoy and make that a big focus, to where you look forward to doing things outside of the market, to where you just being green, like to where the market is nothing but a means to an end, as it were, and it's not your goal. And you're not coming in trying to smack and trying to beat and try to attack the market every day. You're coming in to wait, to be strategic. You know why I want to be strategic about my trading? Because I want to have a good day today, so I can get off at 11 and go golfing, or go to jiu-jitsu, or go spend time with my family, or go play cards with my friends, or I don't know, go paintballing, whatever you want to do. Whatever your fun, enjoyable thing with life is. I want to go knit and crochet. I don't know. And you start thinking strategically. You don't think tactfully. You don't think about the tactics of the trading, which is what you're doing when you're just seeing something, taking trade, seeing something, taking a trade. I'm going down, I'm smacking this mark one. That view it and take it, that's tactics. Your tactics. You're going to step back. You're going to take a step back, and you're going to look at the big picture. If you're like me, this is what you have to do to get there. Step back. Look at the big picture. Say, hey, what does trading give me in my life? Trading gives me this. What am I going to do today? How am I going to have more fun today? Am I going to have more fun today if I kind of trade small at the first, find something that's working, smack the crap out of that thing, take all the money I want, and then I'm going to head out of here, and I'm going to go, I don't know, drive my car, race, going to go, whatever I made, X amount of money, whatever's big to you. I'm going to go do this. I'm going to go have some fun. I'm going to go do this. I'm going to go play my video games. I'm going to log off of here and go play, I don't know, whatever games, Call of Duty, I don't know. I'm not a massive gamer, but whatever that is. Which one is going to make you happier? Which one is going to make you want to wake up and trade? Which way are you going to have more fun that day? Which way is going to make you a better husband, better wife, better family person? Which one? You going in there aggressive, just taking the market out? No, yeah, that's going to make you feel good when it works. I bet it doesn't work. Like, I bet, I don't know, 3 days, 4 days out of the week it doesn't work. Just going in, smacking the crap out of something early and taking it. More than likely that's not going to work the majority of the time. So think strategically. You can think tactfully. You can definitely think about that, because that's your mindset. You know how to just view it and take it. Yep, this is good, I'm going over there. This is good, I'm going over there. You don't, you just view it and you see it and you can go. Step back beforehand, during the market. Hey, I'm up this amount of money. Yeah, I could take more, but you know what? I'm happy. I'm gonna go. And then who cares if you miss $1,000 move? Who cares if you miss something that could make you more money? I'm sure if I stayed here, I could have made more money today. I didn't. I went out and enjoyed. I went enjoyed stuff that I like to go do. That is a huge part of the trick for you guys out there who are default aggressive, view it and take it traders who see the strategies and can take them without fear. Is understanding that, especially for these scalpers, which is who I'm talking to, not these long holders and all this other stuff, that strategic view of your life is going to help you enjoy trading, and is going to help you not get bent, because there's something more important than bending on a name or tilting on a name and making all this money. It's everything else that you get to do. And you don't want to compromise that, which is the real mission. The real mission isn't in here trading, making money. That's a means to do something. The mission is everything else. And trading is that vehicle that gives that to you. So step back and think strategically about your life, about what you enjoy, about what you want to do, and go after that. Find out what type of day trading slowly throughout the day can get you there mentally, so at the end of the day you'll be happier. and you'll be more suited to enjoy what trading gives you instead of being mad because you're down then you're up, and you look back at your week, and instead of being up 2 times what you were up, you only, you made it all back and you only got up a little bit because you had 3 big red days. And it's true. Mark did say it is not about the money, it's about the process. Learn to love the process. And there's nothing wrong with being default aggressive. There's nothing wrong with going after it and just hitting it. So I'm a little long on this as far as just this particular type, but that's kind of part one, and there'll be a little bit more information as far as I'll probably do another one where we talk a little bit more about the default aggressive people and more specific things that we can do. But as a bird's eye view of the default aggressive trader, from the emails I've read and responded to, from the messages that I've talked to, from all, from trading, this person exists. I'm one of them. And what we talked about in this is generally some things that I have discovered help, and also acknowledging your weakness and almost saying it out loud, to be like, yeah, this is real, this is it. I'm going to change. I am going to adapt to become better at what I do, because that's what we have to do as traders. So that's as far as part one, as far as just the psychological part of identifying yourself and knowing who you are. Hopefully I didn't preach to the choir too long or drag on, but that you kind of got what I was saying. And at least we've identified one of the two, or we've identified both of them. And tomorrow we'll come back, and I can answer a few questions on both of them now. So if you have questions about either personality type or anything else market related, you can ask them now. I can answer them. No, Jess. So Jess is asking, when something's going up and I'm hyper scalping it or holding it or doing whatever, do I wait until indicators tell me to pump the brakes, or do I look at my P&L and decide to pump my brakes? I wait for indicators. Usually it's like it's not working, and that's usually my indicator, or it's coming down and the stochastic is also pointing down. Okay, I'm going to leave it alone. So it's not just the money. But then after I'm done, and if I can detach and nothing else is happening and I notice the money, that's when overall I have to stop. And I'm like, I have to be, whoa, 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 whoa. Like, I'm looking at the money. I'm starting to think about this. This is coming into my decision-making process. It's time to chill. It's time to go do something else. And so that's like on a small level, trading a stock. As soon as it stops working and I'm not making money, that's when I stop. And then on the next level, at any point in the day when I really notice my P&L, that's when I stop part two, and it's almost like step away from the computer, go play with the kids, go do something else for an hour, come back. It was like part one, part two. So locking it down when you're green is hard because you want to make more, at least for the default aggressive person. A lot of times you want to make more. And I said, I think at video 1, that if you're having trouble locking it down, at a certain point in the day, write down how much you're up, how much you're green. And then see where you're at the end of the day, and then do that for a week or a month, and let's see if looking at the difference in what your account would be doesn't help you change. Locking it down when you're green also can do with that mindset of enjoying everything. And so this part, and this is why I said it earlier, is finding stuff to do outside of the market that you love is going to help you trade better. Because even if you're down money, unless you're down like, I don't know, a lot, but even if you're down money, you're like, yeah, I'm down a little bit, but I want to go do this other stuff. Overall, I'm trading well. I'm doing pretty good. I'm down a little bit. I'm up a little bit. I've got to go golf, jiu-jitsu, it's just my things, but go play the guitar, go do this, go do that. And you're like, I'm just going to go do those things. And it's so much built into your life that you're going to go do those other things that you like, that helps me walk away from the market, because I'm not sucked into the market emotionally and not detaching. I'm detaching from the market constantly. I'm detaching from my screen. I'm doing something else. I'm enjoying something else. And so having those other things in my life that mean a lot to me help me take and lock down both the green days and the down days. And then sometimes I walk away for a little bit, like, I feel like trading. I sit down, or I leave my volume on, and I hear people calling out stuff like, hey, this name's working, it's trending. I'll come sit down, I'll look at it, and then if I feel like, yeah, I'll trade a little bit more, maybe I start small again, start my day over mentally. I'm not looking at my money. I'm just like, all right, let's try 1 or 2 contracts. All right, yep, yeah, this is working. Okay, nice. I got some good price improvement here. All right, I'm going to take a few trades. And that is kind of how I personally handle locking it down, Gasha, in both directions. And it's getting to a point where you don't care about the money in either direction. You just care about the strategic view of stepping back, enjoying your life, enjoying trading, and making good trades. And some days there's no good trades, and hey, whatever, just I'm going to go away. Are you building an abundance mindset as a default aggressive trader to being more adaptive to things that aren't working? What exactly do you mean by am I building an abundance mindset? MJP1. I am working to adapt, and I'll wait for you to respond, so feel free to keep talking. I am working to adapt. I am a default, that kind of take it when things are working. But I'm working to kind of like adapt early, look at this, look at that, take stuff. Oh, this is working. All right, now I'm going to start size. This is working. All right, this is working. This is working. All right, I'm going to slow down now. This isn't working. And so it's kind of like an ebb and flow throughout my day and a detach throughout my day. And that's how I'm trying to change. If that's what you're asking, I still see you're typing, so keep going. And I'll come back to your question if I answered that wrong. And if it's not working, I stop being default aggressive until I find something that's working. So like last month and a couple weeks ago, like I was like, yo, I'm not trading Tesla anymore. I'm super sized down. I've, all this other stuff. And I did that for a while. And I don't even think I traded more than 10 contracts last month until the very end of the month, because it wasn't a good month. So I was not being default aggressive last month. I was being super cautious and calm because the market conditions had changed. This month, things for me are just like, I'm not even like, they're just going through the roof. I'm having my best month of the year, and by far. And things are just working. So I'm now that kind of cautiously default aggressive, to where I'm finding something that works, and then I'm just taking it, and then slowing down and going back. But last month I did adapt, and I didn't trade heavy. I traded super light, super cautious, and I had a very small green month, and I was extremely happy with it because I was trading intelligently, and it's about making smart trades, not about making money. So hopefully that kind of answers the question. It's okay. That will affect you, and I don't really see a question there. Um, I see some people talking between Captain and Gasha and some other stuff. I'll talk about small accounts in the future, and I'll kind of come to that. Small accounts is a different question. It's a different topic, and default aggressive does help, but you can do it without being that. And it has to do with sizing and trust, and it takes time to learn the strategies. And then once you learn them, it's about sizing and good PI. So PI is 100%, no matter which side of the spectrum you're on. If you don't have a broker that between the bid and the ask, when you buy, you're filled closer to the bid, you're wrong. Like I would say about 80% of the time when I'm winning, I'm getting filled very close to the bid. So if your broker doesn't do that, you better switch. Fidelity is great and E-Trade is great. From, I don't know about E-Trade yet, but from what I've been told, Fidelity's fills are very good. Very, very good. So for either side of this aisle, especially the analytical person, you need to win. For like, you need to have faith, and you get faith by winning. You better be with a good broker, and that good broker needs to give you good PI. And the only two I know that are consistent right now, and I could be wrong, this is just my experience, it's analytical or whatever, or it's just observational, is Fidelity and E-Trade for option scalping. 100% finishing on a green day is important every day. Like, finish green is the most important thing to building your account, no matter how small that green is. So Chase. No. There is no way. So, Chase, I'm going to talk about this tomorrow. I'm going to try to. This is a hard one for me when you're asking me, or when you ask, when is it, clear to do these non-C strategy trades and entries. There's no clear indicator. It's a feeling. It's the ability of somebody to look and be like, this is working, and you just won on a trade, so you do it again, and you win on it, and you just do another trade, and you do it, and you win on it, and then you just go. So there's no specific thing, you know. There's no way to be like, hey guys, this is what I'm thinking that's going to work. And I'm coming through. I'm behind everybody where you're typing because I'm going through the questions. So if I haven't answered you yet, I'll get to you. There's no specific thing that you're going to come to. And really quick on the default, or hang on one second, shift L here. This is a 2-minute chart, just on the letter U, and this is the case for every chart. Look at this really quick. If you're somebody who's cautious, if you get good PI, watch this. Red bar, 2-minute red bar. Look at that green bar. You telling me you can't make money on that? Wait a minute. Here's another 2-minute red bar. Look at that. Oh wow, look at that. You're telling me you can't make money on that? Oh, here's another 2-minute red bar. Doesn't break out again, actually. You'd have to wait for the next one. So here you go. Here you go. Look, 2-minute red bar. Boom. You can't make money on that with good PI? What? Harder. You probably wouldn't trade in here. You kind of get getting choppy. Maybe you get chopped up some in here, or you stop trading. Scroll over. Oh, look, 2-minute red bar. Green bar takes it. Oh, look at that. You can make money. And we go down here a little bit more. So if I was cautious in a small account, if you're a small account person, 2-minute, wait for a 2-minute red bar, buy the 2-minute breakout. That's what I would do. That's what I would do for myself. If you're a 2-minute, I would use a 2-minute chart, and I would buy 2-minute breakouts if I had a small account. But to answer Chase's question, no. There's no specific way other than a feeling. And that's a strength of somebody and a weakness of somebody who has the view it and take it thing. You're just trying stuff and adapting stuff, and it's either working or it's not. Gosh, I don't necessarily. I mean, there's nothing wrong with setting an account like I'm willing to lose this to learn to trade. You don't have to lose, especially in here finding strategies and stuff. You're. I'm not going to say much. I'm not saying your opinion or whatever, or your what you did is wrong there. If you're willing to lose that or not, and I don't know your financial situation, so I wouldn't say anything as far as that goes. But you do want to, it is a small price. Take time, learn strategies. I started with an $8,000 account and grew it. Other people in this room started with 2,000, 5,000. So I'm just looking for other questions. If y'all are talking back and forth, I'm not necessarily reading them. I'm just kind of scrolling. Con, when you say it's not rigid, it's rule-based, are you replying to somebody, or were you saying what I was saying about rule-based or rigid? And Captain, that's why I said that. Okay, you were replying to Chase. Um, that's why I said that this doesn't apply to small cash accounts per se, these two, because the person who may be more aggressive may be forced due to a small account to only take one or two trades in something. So they're kind of adapting and learning what they do until they can get a little bit bigger. So this, while this psychology works, when you have a small account, it's a little bit different. Yeah, and it really is to what Khan said. There is a rule, I guess per se. If I sit here and think about it, it's that I made money the last time I did it, and I'm not taking size enough to wreck myself. So I'm just trading, and it goes up, and it works. And I'm like, okay, I'm gonna do that again. And I'm not thinking, oh wait, is this stochastic's up? Is this up? Is this up? It's like, oh, and it worked, and it's doing it again, and it worked, and I'm doing it again, and it worked, and I'm doing it again, and it worked, and I'm doing it again. It's kind of that, when it's kind of that good bend into a name. And it's not something everyone should do. I've said this. Don't try to be like me. Don't try to perfectly be like me or anybody else here. It's about identifying you, and that's why I'm talking about different trading personalities. You now know the type I am. You don't have to. Don't. I would actually say don't be like me. Be like you. Find out who you are and how you trade, and find your strengths to grow. If you're just trying to be like me or Boof or anybody else, Rose, and you're trying to copy us, you're gonna lose. Just straight up, you can't copy somebody and make money 90% of the time. You have to learn how to do these things, and we're here to help you, but you have to learn them and adapt them to yourself and your mental strengths, which might be better than mine for sure. Earlier, but on your screen, do you generally keep your P&L visible? Yeah, I keep my P&L visible. It's I don't know if it's in the video I did on Fidelity, but I do keep my P&L visible. I can see it, but I'm not like actively where am I at, where am I at, and sometimes it's not accurate. Like it is, but then sometimes it'll randomly be like $10,000-$20,000 off, and then you do another order, and then it sets up correctly on Fidelity stuff. So I don't pay a ton of attention to it. If I'm in the middle of a run, I pay attention to it when I'm done with something, or if I'm kind of trading more slowly. I look at my P&L more, but it is visible. It doesn't bother me personally. Yeah, and stuff, Chase, stuff like other people are saying, like you see the level 2 ticking, tons of buying volume coming in. It's another way to know that to kind of continue. Buying volume slows down, more selling volume comes in, then hey, maybe I don't take it. Little stuff like that. Kelvin, how much room do you give a stock to go against you before sell it? Example, Amazon. It's common for it to whip around. I give it no room. Absolutely no room. I do not give any name any room, no matter the name. Somebody mentioned earlier stop losses. Oh, what do you do with stop losses before the show started? I don't have stop losses because I'm either up right away or I'm pretty much out. And that's where PI comes into play. Like, I will buy something, it'll rip against me, I'll sell it, and the PI, I still win or break even. That's how I know it, like, oh, I like this contract. So, I am like, my thing and why I'm not good with a lot of trading strategies, and I use certain strategies that are suited to me, is I buy, and I guess technically you could say you could give it the bottom of a level, but I buy and I want to be almost instantly green. And if I'm not pretty much break even or green instantly, I'm out of the trade and I'll wait to re-enter. That's most of the time. And yes, that's why I haven't been trading Tesla, is because I get in and by the time my options are filled, I'm like $1 down or $1 up. But a lot of times it's been down just because it's so whippy. And then you click sell and the options are down below where you bought them. But when you click sell, they were there. But by the time the order went through, the price changed. So it's been so whippy. So I haven't traded Tesla a lot. So I don't do stops. I don't believe in stop losses for a scalper. I believe in instantly up money. And when we talk about how I hold because I'm green. and I sell some, lock in profit, and the stock would have to drop so hard for me to lose on that trade. So if I had 10 contracts, I sell 5 and I hold 5 for a runner. That's easy to do. You know, it pops, I'm up 20 cents, I sell 5 and I hold 5, and then I make another 40 or 50 cents on those other 5 contracts. That's how I hold things. I'm generally not just massive sizing into something, holding a whip, and then, oh man, finally now it's up, and then I have some number in my head that I want it to get to. It's like appropriate size to where I don't even think about the loss. I could lose double the spread and not be hurt mentally. So I'm not even thinking about it. I jump in. I'm green. All right, I'm green. It's popping. It's popping. It's going through a trigger. It's going through a trigger. It went through 2 triggers. I'm going to sell, and I'm going to hold. If it goes through a 1-minute trigger and you have a 2-minute green takes red, all right, I'm going to hold half for this trigger. All right, that trigger went. All right, I'm selling the rest of it. And that's generally speaking how I do my hold trades. And I don't have stop losses number wise. I have stop losses like I'm not up money, I'm out, because I have an unlimited amount of buying power. So I just buy back as soon as it's done. So there's no reason to get FOMO'd into missing a trade, because if it wants to go back up, I can jump back in, which is also not always smart. Sometimes I make rules if I'm losing like only 1 trade per candle. I agree, and that's kind of part of the conversation, what DKT said to Chase. But that's more when we talk tomorrow about the analytical trader learning when to size into things and when they can get to that level and stuff like that. So when they can learn how to do that and when everybody can learn how to do that, that's kind of the trick. But it's about feeling, not analytics. It's about flow. It's about you're just used to watching the stock move, so you know what it's going to do when stuff starts picking up, and you're used to how the option trades and stuff, so you know how to make money in that option and in that name. There's a reason I don't trade Boeing. Never trade Boeing, period. Because I can't make money in it because it doesn't fit my style. Yep, I chunk trades right away, MJP, if I'm instantly down. Like, literally right away. It's very rare that I hold a whip. Sometimes I will, but it's rare, and there has to be a bigger reason that I'm holding that whip. I'm like 95% of my trades, I'm not holding a whip. It's about a good PI and good entry, and that's it. PI is so key. If you don't have a broker that fills you closer to the bid than the ask, change your broker. That is my opinion. I'm not telling you what to do. I'm talking to myself, little gator over here. If you're not getting good PI and you're not getting filled closer to the bid most of the time, get the heck away from your broker and go trade with somebody else. Fidelity and E-Trade seem to be good right now. It makes this so much easier, because I get in a trade, I am almost instantly up or flat on that trade. It's all PI. I would be a failure as a trader if I did not get PI. Like, I could not do what I do without good price improvement. I would have to adapt massively, because I was trading you today, and that's why I have this chart pulled up. It's pretty much the only name I traded, and I had a very big day, and I was getting filled on the bid or very close, within 10 cents of it, on a dollar spread, and then even if it wasn't moving, I was selling it and making money on those trades. PI is where it's at. Find a broker with PI. Fidelity and E-Trade seem to be good. That is the best thing I can tell you, no matter what side of the spectrum you're on. Only if it's super tight so Sava has always been common, Chase. So yes, I've been on that, but I'm trading common, so PI not a big factor there. AMD, yes, but the spreads are so tight so that you don't have to get PI if there's a 2 cent spread or a 5 cent spread, because if the name's moving, you get in like you're within 5 cents, and you know, if you're trading AMD and you're down 5 cents, that's an instance where I might hold something, because like 5 cents on AMD, like you lose 20 cents to a point when you trade Tesla. So if you can handle that, you know, AMD is probably not going to rip a point against you 90 something percent of the time. So that's something to, you know, that goes into the decision making process for when I hold whips and stuff, is like, you know, how much these options move. You know, that's how much, like, you know, did the you know, the price of the stock just drop, but the options didn't drop any. All right, I might hold this a little bit and see what happens, or sell some and hold the rest. So yes, you don't have to get PI if the options are super tight, but it helps. And even then, it still helps. Yeah, mostly on 2 minute candles, Jess. Like 2 minute and 5 minute candles. If I haven't been winning a lot, I will take those 2 and 5 minute candles as they break, or within 5 or 10 cents of them breaking, depending on the name. If I want a higher quote unquote conviction, the 2 minute green takes red, you can usually buy right around there. I try to front run. It's rare that I don't want to. But sometimes I'll be like, you know what? It's like, depending on the name, it's like, it's right at, it kind of broke already and it hasn't ripped yet, but I really like it. It's strong. Oh, the Qs are popping. Okay, I'm going to jump in it now, type thing. Later, Gasha. Thanks for coming. Thanks for all the stuff, for your participation. You're the best. So I almost never, and I would say about 95 to 98% of the time, I front run everything. I buy before the trigger. Like, very rarely do I not. So it has been a little over an hour. Not that I don't mind hanging out and talking more, but if there are no other specific questions, you know, we covered tonight the type of trader I am, and tomorrow night we're going to cover the analytical trader, strengths and weaknesses. You know, we talked a little bit, not extreme depth. We will get to that another time, but extreme. Hopefully we'll get into more depth in both trader, and kind of as we establish. So through these lessons, we've established certain things. We've established different things in each lesson, and we will continue to build on those as I continue to do these and incorporate them together, because everything flows together and everything's kind of connected. So right now, where we're at is, you know, where we're at, and we will add on to it, adapt it, combine things, and go. So just because I mentioned something once doesn't mean that I'm, you know, done talking about it. We're going to go in more depth. This was kind of an overview, basic strengths, basic weaknesses, what you can look for in yourself, and so you guys who are on the other side can understand, you know, how these people and what these people are doing, and hopefully you can, you know, maybe even come a little bit more to that side, or just know why and how they're doing what they're doing. They're not seeing something that you're not seeing as far as the analytics go. It's more of a personality type, and more of a, you know, gunning for it, view it, take it, as Khan says. I like to view it, take it. I'm going to change the name of this video on YouTube to that. So the view it, take it trader. Yep, just get in before me and you'll be good. Early next week, probably, Captain. I could talk about it some tomorrow too with the analytical trader, but I'll probably do something on a small account on a day next week, and I'll announce it like after the market closes. Like, I'm going to talk about small account trading. But honestly, I could tell you right now, I showed you a minute ago. Watch this 2-minute chart. Here's what I do with small account. I'll give you a thing. Find a name that's working, that's trending. 2-minute green takes red. 2-minute green takes red. 2-minute green takes red. 2-minute green takes red. A little chop zone in here. You don't really have any good setups. There's no volume resets, so probably you don't trade that. Go to any chart and find this. You know, pull down, hit a moving average, broke through. Here's a green takes red. Pull down, pull down, pull down. Here's your next green takes red. Oh, look at that. That's a small account trading. Is you go to a 2-minute chart, and I could do this with almost any name, I think. I don't even know what Tesla did today. Did it go up or down? I didn't trade it. Down. Oh, we won't do that one. What names went up today? Let me check this on another name. Did AMD go up? Might be a bad day. Here you go. Here's AMD. Let's see if this worked. You wouldn't take this actually because these are all below the first 2-minute high, so this is not a good name. Yeah, I wouldn't have done AMD until here. Technically, you could have compression here. So if you're Kelly or somebody, there's compression here. NVIDIA was awesome, Alibaba. Okay, let me check out NVIDIA. Alright, so we gotta wait for us to get, technically, you gotta wait for it to get over the first 2-minute candle, or the first, yeah, so here, so we're looking in this range. So NVIDIA was awesome, but it wasn't never really set up, but you could still take it. So if I was trading NVIDIA, not a good setup because it was never above the high, so I never would have taken it. But let's see. 2-minute, so red bar, nope. So none of these took, so none of these would be a trade. Here, you would have a trade. Maybe. I wouldn't have done this one because this candle's so big. Green takes right here, so you got a red 2-minute candle when a green takes it out. Nope. None of these. Oh, here you go. So even with a name that's not working, hit the 200. That's a sign, possible support. Next 2-minute candle, you get a little pop. Doesn't look like it would have been easy to make money. Another 2-minute candle here. Oh, look, a pop. Oh, look at that. All right, so percentage-wise, oh, here's another red 2-minute bar. Look, a pop. Oh, look, it pulls down. Wait for another bar that breaks out. Down here, here's your next bar that breaks out. 2-minute, you can make money there. Here's one that's super small, kind of broke out. Yeah, you probably would have just got stopped out of that one. Maybe taken a small loss, small gain. You know, it's kind of choppy here, so I doubt you get wrecked. Here's your red bar. Here's the next take. So, I mean, you can see what I'm talking about. You can name any name, and I could go to the 2-minute chart, and this is what you're going to find. So, you know, down here, this is the most effective strategy, in my opinion, if you're just looking for something to take. Wait for a 2-minute red bar by the breakout. You know, here, probably losing this one. So it's not like 100%, but here's one right here. Another red bar. Boom, that worked. Definitely make money in that. Another red bar. Look at that red bar, how that takeout worked. Here's another one down here. So, small accounts, go check out the 2-minute chart. Super helpful. Sorry for rambling on that, but you could literally give me any chart and do this. Go back, test this strategy at the end of the day, and tell me how many times you can't make money on this. When I do my 5K challenge, I'll be using a 2-minute chart. Alright guys, as far as YouTube goes, video's going a little long. I can stay out in Discord for a few minutes if y'all want to talk, add anything else, but I just want to end here on YouTube. Thank y'all for watching this. If you took time to watch this with us, I appreciate you hanging out. If you like this content, you would like to see more of it, like, share, subscribe, tell other people about it, leave comments, let me know, you know, topics you'd like me to cover, other things like that. We can go through them. I'll do my best. And I will have another video up tomorrow night, so I look forward to continuing this tomorrow. Have a great evening. Happy trading. Make money.